Hello friends, done a lot of videos on straddles and I have also explained it on quite a few occasions. But there is something more which is interesting which I thought I can explain it today. Broadly speaking, what are straddles? Straddles are basically, it is a combination of a call and put of the same strike price of the same instrument and of the same expiry. So if we are talking about, let's say 24,500 Nifty of 28th August expiry, the call of 24,500 of 28th August expiry and the put of 24,500 28th August expiry together will form a straddle. So of course both have different values. Sometimes they may be, if Nifty, it depends on where Nifty is naturally. So if Nifty is, let's say, higher, let's say it is 25,000, the call will be much higher. It will be at least 500 rupees and the put will be negligible. Of course, that also will depend on how many days are left to expiry. Let's say there are 2-3 weeks or more for the expiry, then it will be even 100, 150 kind of premium for the put. And let's say Nifty is at 24,000. Then the 24,500 call will be very negligible and the 24,000 put will be at least 500 because that is the difference between the two, the strike price and the current price of Nifty. So typically what I have explained in the various videos before is how and why you should short at the money straddle. What is at the money? At the money is where the current Nifty is. So if Nifty is at 24,500, the 24,500 straddle is at the money. And what happens is straddle trading is typically a short straddle. Long straddle is something which is a completely different aspect, which normally I don't talk about because there are various arguments against that. But if you can look at the chart and understand the direction of Nifty, then a long straddle doesn't make any sense. Short straddle definitely makes sense because most of the time what happens is, it is a well-known fact that any instrument trends for hardly 30 to 40% of the time, and for 60 to 70% of the time it is range bound. Capturing that range bound move is ideal for shorting straddles. Of course, one thing is very important is you must keep in mind the number of days to expiry because that is extremely important, because otherwise what happens is there can be a sudden move in the underlying which will cause problems with the straddle because that one of the legs will move fast. Now you need to understand the price action of a straddle. So let's say Nifty, like I explained earlier, if Nifty is 24,500 and you are looking at the money straddle, premium of the 24,500 call and premium of the 24,500 put will be closest to each other among any other strike price. So if you take 24,600 or 24,700 for the straddle, the difference between the two will change, will increase. So the premium is closest at the money strike price, and that was the reason why in my earlier videos I had talked about shorting at the money straddle, which essentially is a non-directional strategy. What does it mean by non-directional? That means if the straddle has given a trigger for selling it, shorting the straddle, which I have explained the rules in my previous videos, that means Nifty is going to be range bound within, let's say, 100 or 200 points, sometimes even 300 points. So you are capturing that sideways move of the underlying by shorting a straddle, because that in that period long options will not work because Nifty is sideways. It might go up by 100 points, come down by 100 points, and all this will happen, but the straddle will keep going down because simple reason that you have selected at the money call and put, which are closest to each other. So one will go down, the other will go up slightly, then this will come down, the other will go up slightly. Effectively the two combined, the straddle comes down, and that is something which I have explained on the basis of charts on the couple of videos earlier, the link of which we will give in this description below. Something new concept has been seen over the last many months, which I have observed and which serves two purposes. One is, very surprisingly, this is something quite startling when you look at the charts, which I'll show you. It shows the direction of the underlying. So in this case, we are going to talk only about Nifty. How can a straddle show the direction of Nifty or the underlying? So it is very simple. Like I explained in earlier, if Nifty is at 24,500, the 25,000 straddle, call and put, in that, the 25,000 call will be negligible. The 25,000 put will be at least 500. This is simple common sense, but you need to register it in your mind. At 24,500, what will be the value of a 25,000 put? That will be at least 500. And what will be the value of the 25,000 call? Depending on the, of course, number of days to expiry. If there are even, let's say, 3 weeks to expiry, it might be 100 also. If there is only maybe just 1 week to expiry, it might not be even 50. So it is a skewed straddle, like something like 50 and 100. So the difference is big between the two constituents, call and puts. Similarly, if you go to the 24,000 straddle, when Nifty is at 24,500, at 24,000, the call will be at least 500 because Nifty is at 24,500, and unlike the exactly reverse of the previous case, the put will be very negligible. Again, of course, depending on the number of days to expiry. So again, that skew which was there at 25,000 straddle will be here also at 24,000 straddle. Of course, in the reverse fashion. Here, the call will be much higher, maybe 5 times, 10 times the put. Whereas here, the put will be higher, 5 times, 10 times the call. At the money straddle will be very close, maybe 20-30% difference. If one is 150, the other will be 200 or something like that. Now, what happens is if you plot a straddle, the chart of a straddle which is higher than the current price of Nifty, what does that mean? Like I explained earlier, instead of I'll show examples of some charts. If Nifty is at 24,500 and if you plot the chart of 24,700 straddle, so again, like the 25,000 straddle, here the put will be at least 200, because that is where we are talking about the straddle strike price, 24,700. So the straddle, the current price of Nifty is 24,500, and we are talking about 24,700 straddle, which has 24,700 call and 24,700 put. So 24,700 put will be at least 200 minimum, depending on the like I said, number of days to expiry, and the call will be negligible. So if that straddle has given a sell signal as per the rules which I have explained in the previous videos, what does that mean? That straddle is essentially in that which is the dominant leg. In 24,700 straddle, the dominant leg is naturally the put, right? 24,700 and Nifty is at 24,500. So that put will be at least 200 and the call will be negligible. So if that straddle is coming down, that means the put is bringing it down, right? You have to understand this simple price action which solves a lot of problems of where the underlying is going. So effectively what you are trying to understand is if the straddle is coming down of the 24,700 strike price, that means the put is going down because of which the straddle, because if something is at let's say 200 and the other leg is only 50, which is the dominant leg, the leg which has 200 premium. So that is causing the straddle to come down. The 50 leg doesn't have that much strength in it to bring the straddle down, because the 200 leg will go up further, because one leg goes down, one leg goes up in a straddle. So here when you are shorting 24,000 or looking at the chart of 24,700 straddle, and if that straddle is coming down, that means the put is bringing the straddle down. And when what happens when the put is bringing the straddle down? Again, a simple common sense logic which everyone knows. When the put is going down, that is bullish. Simple. So if when Nifty is at 24,500 and 24,700 straddle is going down, that means Nifty is bullish. Exactly opposite, if you look at 24,300 straddle, in that out of the two constituents, the 24,300 call will be at least 200, right? And the put will be negligible. So if that straddle is coming down, both straddles coming down is very, very rare. In fact, almost impossible. One of them will definitely have a direction, clear direction. So when 24,300 straddle is coming down, that means the dominant leg, which is the call, that is bringing the straddle down. So depending on which one is coming down. So effectively what it means is whenever you are looking at a plus 200 and minus 200 straddle, when I say plus 200, that means 200 the current price plus 200 and current price minus 200. And here you can use it on weekly options also. I'm going to show examples also. So when you see that the plus 200 straddle is coming down, that means Nifty is going towards that straddle. That is not a target. By no means that is a target. But basically, one thing is clear, from 24,500, instead of going down, Nifty is likely to go up. There are more very high chances that Nifty is going towards 24,700. Exactly opposite is if 24,300 straddle is coming down, that is the basic concept. Which straddle is coming down? So I'll show you the chart. So at 24,500, if the 24,300 straddle is coming down, that means Nifty is going towards that strike price. So let's take a case of example of today, which is today is 7th August, and in the morning when the market opened, Nifty was near 24,500, 24,470 or so. So here we take 24,500 as the at the money. Now if you look at the 24,700 straddle in the morning, you'll see here this is the whole day. Now for those who have not seen my previous videos, I urge you to see those videos first and then look at this, because otherwise it's going to be difficult to understand this concept. Every single straddle is plotted with a box size of 0.5% on point and figure charts, and you have a triple moving average, and those red and green lines which you are seeing are the it's a feature called anchor support resistance, which is you can take it select it from add study and then patterns and change the default parameter, it is 20, so make it 10. So once you plot this, this is the setup for selling a straddle or looking at a straddle chart. So in this case, 24,700 straddle in the morning, it opened up with an anchor column. In fact, there was a gap down, I think, in the morning. So naturally, the 24,700 put, which was always strong yesterday, in the sense dominant, that became even more dominant, and it took the straddle up because the put was dominant, and it went on going up all the way till about 1:30 or so in the afternoon. By that time, Nifty had gone all the way to, I think, 24,360 or something like that. So this straddle clearly showed that Nifty is going down because this straddle is going up. This is plus 200 straddle. Now, exactly opposite to this, if you look at the minus 200 straddle, which is 24,300. Now here you will see a price action which is exactly opposite, because here, if you can imagine, or I'll show you the chart also, when Nifty was 24,500 or 470, that time the 24,300 call was the dominant leg that had more premium than the put, naturally, because this is today's expiry, 7th August. When you're talking about a strike price which is 170 points lower than the current price, that means the on the day of expiry, the put will be negligible, maybe not even 10 rupees. So the call was the dominant leg in the morning, and this straddle was going down. That means Nifty is bearish, as simple as that, and it is going towards, like I said, the straddle price, the strike price of the straddle, which is 24,300. Again, I repeat, this is not the target, but basically you select 200 higher and 200 lower just to get an idea of where the underlying is going. So when you take 24,300 and Nifty is at 24,500 and this straddle is coming down, that means Nifty is going the direction between the two, 24,700 and 24,300. It is going towards 24,300. Once you have that knowledge, then taking a trade, whether you want to short a call or buy a put or short Nifty futures, that will be an independent trade setup on that chart. That's a different story altogether. But here in this case, one thing which you come to know within the first 5-10 minutes is Nifty was bearish right in the morning. So then it started coming down when Nifty bottomed out at around 1:30, around the same time when that 24,700 straddle topped out. For example, in the morning it was near 300 and it came all the way to 75. Now, another thing which I wanted to show was here, if you look at the 24,700 call and put, this is the chart which shows the 24,700 call and 24,700 put on the same chart. So the green line is 24,700 call, the red line is 24,700 put. So here you will see in the morning, if I take the cursor to the morning, if you see on the right hand side, the 24,700 call was just 8 rupees 30 paisa, and on the left is the price of the put, which is 196. So here, when this straddle is going up, that means that one leg, there are two constituents of the 24,700 straddle. One is the put, which is 197. Other is the call, which is 8. When this straddle is going up, that means the dominant leg, which is 196, is going down, going up, taking the straddle up. So naturally, you will see the red line went up all the way from 196 to a high of 346, and the straddle also went up, and this again the time will be same, around 1:30. Now if you look at the similar chart of 24,300, this is what it shows. Now here, like I explained earlier, the 24,300 call will be the dominant leg, so the green line. If I take the cursor to the opening, the 24,300 call, the top right, it shows about 218. So that was the call. I like I said, it will be at least 200. So it was 218, and the put was only 5.65 because it was like I said, 180 points out of the money. And then this call started coming down. This straddle was going down. That was very clear from the chart of the straddle. And from 218 or 20, it came down all the way to 66, which was, again, the time will be same. Everything bottomed out or topped out at the same time. At about 1:30 p.m., when Nifty bottomed out, this call had come down from 220 to 66. And the put, since it was still out of the money. So like I said, this was not the target. It was just the direction. From 500, it is coming to 300. And Nifty bottomed out much above 300, 360 or something like that, 24,360. So this put never became in the money. So that also was near only 13 rupees. So from 5.5, it became only 13 or so. Oh, sorry, here. 13 rupees, and that was the highest it went to. And then Nifty, after Nifty bottomed out at 24,360 or so, this put also started coming down and the call started going up. So this is the simple explanation of the price action of the individual constituents of the straddle. So I have shown the both the 24,700 straddle and how the constituents behaved, the 24,300 straddle and how the individual constituents behaved. But of course, in the morning, like I said, 24,300 straddle was weak, but the 24,300 put was only 6 rupees. So there is no point in shorting that kind of a straddle. So then what do? Go to the next week's expiry. So if I take 14th August and plot the same charts, so this is 24,700. Of course, here the slope will be slightly lesser in the same, I mean, the straddle of today's expiry, it was much steep. The upward for 24,700 or the downward for 24,300. For the next week, this slope is slightly lesser, but still the direction is the same. So this 24,700 straddle is bullish. It is going up, which means the put is bullish because the straddle is going up. And like I said, the dominant leg is the put, even for the next week's expiry, because this is 200 points higher. And if you go to the 24,300 straddle of next week, so this is the straddle of next week. So this was clearly bearish. So this was an anchor column because, like I said earlier, there was a gap down. So this opened from 420 all the way to 363. After that, this double bottom sell or the turtle bearish trade here, which is below 360, was a trading trigger. So when you have the direction clear, there are two ways of taking a trade. One is take a simple directional trade based on whatever your favorite instrument is, either shorting Nifty futures or shorting a call or a credit spread of the bear credit spread or a bull put spread or whatever, or just buy a put in the morning. And then once this straddle turns over here, that means Nifty has started retracing whatever no one knows till where it will go, right? But it has bottomed out. And that was a case where you need to cover your shorts. So this is what happened. And since this is of next week, it has given a short in the morning and it has already given a long. When I say long, I mean based on the chart setup, which is a triple moving average and crossing the various resistances. And it is now bullish. This is 24,300 straddle is bullish for next week's expiry. What does that mean? Whenever a straddle is going down for a 200 away strike price, that is the level where Nifty is likely to go. So here this is opposite. Now if I take the 24,700 straddle of next week, so here in the morning it was going up. Again at 130, 135 it topped out, started coming down. Then there was a huge anchor column. Of course, Nifty went up quite sharply after 130 for the last couple of hours. And now what is the direction of the straddle? This is a very bearish straddle. There is a big bearish anchor column which has 51 boxes all the way from 403 to 314. And then a bearish follow through, which is a turtle breakdown. So this is definitely a sign that this straddle has become bearish, and this is 24,700 straddle, which is 200 points higher, because right now Nifty has come back to, okay, this is 24,600, but still even 100 points higher. Okay, before that let me plot the 200 points straddle for next week. So I select Nifty, select next week, and 24,800, 0.5% box size on a 1 minute chart. I have a template called straddle which plots these indicators automatically. So this is even more bearish, because if you see right now the call is 77 and the put is 203. And when the put, which is the dominant leg, the total of the straddle is, like you can see, 282, out of which 203 is the put alone, because this is 200 points higher. So when this is coming down, that means Nifty is going towards, so between 200 higher and 200 lower. Again I repeat, this is not a target, this is just the direction. From the current price, which is 24,600, as of now is something which is extremely important, because I am recording this after the market hours. No one knows what is going to happen tomorrow. Tomorrow will be a new day, so you have to see the same thing for the next day. But this can be, you can take a positional view based on this, and this shows that maybe Nifty is likely to go up than going down. So basically you need two ideas. One is either it is likely to go up or likely to go down. So here this means this straddle is bearish, which means Nifty has more chances of going up from here. And this is something which can be traded. Never trade the the current week straddle. If you are a trader who trades straddles, short straddles, you can always go to the next week straddle, because that has a lot of premium. For example, if I show you the same thing which I had shown for 7th August expiry, do a chart comparison. Nifty 24,800 of next week, that is 14th August, and the put. I'll just make it a 5-minute chart for clarity and intraday lines. So here right now the call is only 78 and the put is 203. So what it means is the leg which is worth 203, that is bringing the straddle down. So when the put is coming down, of course you can short the put. What the idea you can get from this chart is that the put is dominant. That is very clear. Now from the straddle chart, you know that this straddle is coming down. So basically it is a bullish indication. So once you have a bullish indication that Nifty is either, I mean, one thing, there are always two ways of looking at it. What not to do and what you can do. So in this case, what not to do, don't be short. As simple as that. What you can do, look for bullish opportunities. Again, look for bullish opportunities where it is affordable. There is no point in saying I'll go long in Nifty futures at 24,700 with the stop loss of 24,500. That doesn't make sense. So you look for a bullish setup on your favorite instrument, like for example, a simple double top buy or any other pattern which we have so many of them in point and figure charts, or buy a call again based on the pattern on a 3% chart if it is positional, on a 1% chart if it is intraday, based on the Camril level. So again, for Camril levels, I have recorded another video which is also something which you can use to get intraday levels. Now this is about weekly straddles. For the very short term, you can get an idea of where Nifty is going. Of course, today, let me give some caution. This was a very classic case where it was very clear right in the morning because there was a gap down, and it was very clear that the 24,700 straddle is going up, the 24,300 straddle is coming down, even for the 7th August expiry as well as the 14th August expiry. Now, on a monthly strike price, monthly straddle, what you can look at. So I have those charts also. So let's say I take 25,000 straddle for the monthly expiry. So here it won't be as clear as the weekly expiry because these options move slowly, naturally, because there is still almost 3 weeks left for expiry. But the fact that this also had gapped up in the morning because this had become way out of the money. It was plus 500. So here instead of you can look at plus 200 also, plus 200, plus 300, like I say, swadanusar. So for weekly, it should be plus minus 200. For monthly, you can select whatever suits you. You can try it plus 200, plus 300, plus 500. Same way with minus. This also has shown that it was bullish till 130, and exactly similar pattern which was seen in the weekly straddles. It has become quite bearish. It has gone below the previous lows, and now it has become bearish. This is the 25,000 straddle. Now 25,000 straddle for the monthly expiry has become bearish, and Nifty is at 24,600. So if you attentive in listening to what I said earlier, you know what is the direction of Nifty likely to be. Now if you look at the 24,500 straddle, that is still going down, right? So that's why I said the monthly straddles are not so clear because this is still almost at the money. So this is always, in fact, this is exactly what I was talking about in the earlier videos. At the money straddle is typically going down. Quite clear? So exactly what I was talking about. When this straddle is going away from that strike price, that means Nifty is bullish. The 25,000 straddle is coming down, that means Nifty is bullish. So basically both the straddles together give you an idea of the strength. If both are not very sure, that means it is going to be range bound for some time. This is the monthly straddle. On the basis of a weekly straddle, you can definitely identify. In fact, the current week gives you the exact idea because that is it moves the fastest naturally because the call and put, the delta comes into picture, and if Nifty is going to move big, that also will move big. Whereas for trading purposes, whoever is shorting Nifty, the straddle, it is always the second week, the next week. So today is Thursday, so you can look at 14th August or even maybe 21st of August expiry. And this 25,000 monthly straddle gives a broad view of what you can expect. So then you can go to a Nifty future chart or a monthly call chart or a monthly credit spread, debit spread, or a put short, whichever is your favorite type of trade, and you can trade as per the setup on the chart. But this basically gives you an idea of where the underlying is headed. So this was basically two things. One is to get an idea of where the underlying is headed, and in terms of actually trading a straddle based on the rules which I have explained in the previous videos. Always look at the next week's straddle chart, and that gives you an idea of which straddle you can short. I have always said no point in going long in a straddle, and in fact that is what conventionally people talk about a directional straddle. Here I am talking about a directional straddle which tells you where the underlying is heading. That's why I'm calling it a directional straddle. So idea is always shorting a straddle, but it tells you which direction Nifty is also going and which straddle you can short, because when you go to next week's straddle, both the premium are quite, they're not as skewed as the current week's premium. That is the idea. So hope you understood this video, and in case you have any comments, definitely write down your comments below this video, and do share this video and subscribe to our channel and like this video. Thank you.